This week on the VC React podcast, MENA. First up, Goldman Sachs, Charles Schwab, and Morgan Stanley are on a private markets shopping spree, buying industry ventures, Forge Global, and Equities to own the pipes for late-stage venture and secondaries. Are we watching the true mainstreaming of secondaries and pre-IPO access? Next, Dubizzle. Dubizzle has pulled its planned IPO in the UAE, adding to a growing list of Gulf or MENA tech listings that never happened, or traded badly after they did. Is this just a timing blip or a clear signal that we're not ready for tech IPOs yet? Should founders and investors look more seriously at secondaries and private liquidity instead of IPOs now? Then we've got an Egypt to global Deeptech story. Global Foundries snapping up Cairo-based InfiniLink just months after its $10 million seed round. Let's react. Hi, everyone, and welcome to a new episode of the VC React podcast, MENA. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, funds, and investment rounds. Let's jump into it with our guests for today. Basil Moftah, Managing Partner at Key Capital, Nada Shaheen, Managing Director at GB Ventures, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news is brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Before we dive in, a quick one. Ever notice how finance teams don't have one right way to work? Approvals in Slack, invoices in email, reconciliations in spreadsheets. That messy middle between contract signed and cash received is where time disappears and money stalls. It's follow-ups, escalations, statements, reconciliations, and awkward nudge that turns into a chase. Most automation tools tell you to change your process to match their product. Okta does the opposite. It learns how your team already works and makes it faster. No major changes, no heavy retraining. From the minute a deal closes, Okta's AI agents spin up invoices, schedule and personalize follow-ups, reconcile payments, even surface financing options, then adapt when your approval path changes or those unusual cases pop up. Same process, fewer delays, faster cash. Teams at regional leaders like Kareem and Lean Technologies, plus hundreds more across MENA, use Okta to reduce the "where's the payment" shuffle and bring cash in sooner without forcing finance to work like product or sales. It's the kind of tool that quietly fixes the part of the business everyone tolerates but never loves. A shout out to everyone at Okta for sponsoring our episode today. Before we get into the news, Abu Dhabi Finance Week is coming up next week. It's getting really bigger every year. This year, I saw the speakers on the website. They have Ray Dalio, Bill Gates, Brian Armstrong, and so many other big names there. Are you guys attending?
Yeah, for sure. We're going to be there next week, Monday through Wednesday. It's probably one of the most unique events that happens here in the region because of the global attraction of investors. We see it in Qatar, we see it in Riyadh, but I think Abu Dhabi's got a special place when it comes to being able to invest and attract global players. I think Ray Dalio has all but moved Ahmad to Abu Dhabi, just to be clear. So I think he's based there. But Bill Gates should be interesting, and it also makes it sounds like really interesting. He's going to announce something really cool. So let's see what he's going to announce. Listen, Abu Dhabi is playing a bigger and bigger role when it comes to international capital, and we can't underestimate what role it plays. So I think Saudi is still very local for local, and it's still very much an ecosystem built on itself, with international capital still yet to show up in big numbers, but Abu Dhabi's already surpassed that quite significantly.
Nada, we were talking about Web Summit before we started recording. How do you compare Abu Dhabi Finance Week to Web Summit or LEAP in Saudi?
Yeah, actually, I feel like the Abu Dhabi Financial Week is very different because it has its institutional nature and also it's entrepreneurial. And I guess it's taking like a different strategy than the other events that I have attended before. Actually, I feel the FOMO that I'm not coming because I have
Me too,
lot of,
actually.
Yeah, I have other trips and events, but I feel the FOMO because I really know how important this event is and how different it is in terms of audience, in terms of speakers, in terms of content. So yeah, it's
Yeah.
different than any other events, Web Summit or Leap. Maybe you can compare Leap to Web Summit to Ditex to this kind of events. It has like its own nature, but Abu Dhabi Financial Week, it's totally different.
Okay, Jamie, you're in Abu Dhabi. What do you
Yes,
think?
it's my first time going. I got my ticket yesterday for the
Okay.
week. So thank you to the guys
Nice.
there for providing that. But yeah, it's remiss of me really because I can pretty much see ADGM outside my window at the moment. And I've been here now, 5 years, and it's my first time going. It's always just coincided with generally go home to Ireland around Christmas time. And I'm not here, but this time I am. So I'll be there Monday and Tuesday. Excited to your point. Some good speakers. Bill Gates, to your point, Basil. Yes, very mysterious as to exactly what the nature of that announcement is going to be. Trying to see what interviews I can line up as well. Trying to be selfish in terms of who I get to speak to. May not necessarily have any sort of relationship to the regional ecosystem, but just trying to get as much face time as I can. But it looks really good. It's super exciting. And I think maybe it's the enclosed sort of nature. It's the side events around it. Although it's massive in terms of scope, in terms of who's attending, it's not in terms of the setting itself. That hall for Leap in Riyadh is just so prohibitively large. Like
I don't know, Jamie, if you got the invite for our mixer, but you should join our mixer on Monday.
I'll be
night,
there.
so.
I'll be there. I'll gate crash, Basil. I'll gate crash. Although I've been invited now, so I suppose it's not gate crashing. But in any case,
Perfect. Good. I'm glad you got the invite. No, listen, Ahmed, I think comparing them is not easy to do. The question is, does money get the ideas or do the ideas get the money? And I think I love Web Summit, by the way. I think it's fantastic. I think that the companies, the content, the size of the event makes it really fun to attend and be part of it. And I think that's important. I think Leap is just a whole other like category, right? Like it's a whole, these are part of competing on the global stage with these mega events where you have all types of investors as well as companies, small, big, all of them there. Web Summit is really great content. I think Abu Dhabi Finance Week is really listening to what investors are thinking about, right? That's what you're really hearing. And given AI, I think it's going to be an exciting year for sure.
Okay, so let's get to the news. Jamie, what's up this
if
week?
you want to chat about secondaries, given who we have in our presence,
Basil.
it's only right.
Surprise, surprise. Look how that plays out.
Yeah. But look, I think it's only right in many respects because it has just been a sort of landslide of deals on a global stage over the course of the last couple of weeks. So I think it's only right that maybe we frame things from a regional perspective as well, which I think would be helpful in terms of positioning it. But just to provide a small bit of context and overview to that point, we have Goldman Sachs. I think when we kicked it off, they acquired Industry Ventures. Then we had Charles Schwab, Forge Capital. It's funny, all of these names are so familiar from you, Ahmed, as well, in terms of our conversations, which is so funny. And then Morgan Stanley with Equity Zen as well. Look, I'm keen to we should kick off really with Basil. What's the perspective on this? Why is this all coming together at this particular moment in time? It doesn't seem like it's a coincidence that all of this is taking place in such a short, condensed time frame.
It's interesting to me that they all happened within the same month. Like they're one after another. And we know transactions don't happen that quickly. It's not like somebody did something and somebody else woke up and said, oh, I got to do that too. That means all of these processes must have been happening over the last 6, 7, 8 months in parallel, conversations, negotiations, due diligence, and I'm sure a whole lot of posturing on both sides, etc. The first thing I would say is let's be careful with comparison. I think Forge Equity Zen with Charles Schwab and Morgan Stanley is one strategy. Industry Ventures with Goldman Sachs is a different strategy. The first two, Forge and Equity Zen, is really about retail customers being able to access secondaries, right? And there are marketplaces. A lot of it is employees or former employees listing shares, angel investors maybe. And it's really retail customers of Morgan Stanley in the US, retail customers of Charles Schwab in the US being able to access. Industry Ventures is a little bit closer to my heart, given what we're doing at Key Capital, which is that it's with Goldman Sachs. And while it definitely has a private wealth angle in what they said, it clearly also has an institutional angle as well. And what I mean by that is we're talking about institutional capital being able to access secondaries. because industry ventures is a fund. It invests, it actually takes principal investments itself, it makes the buyout itself, and therefore what Goldman Sachs gives them is a whole lot more firepower. If it gives them a whole lot more ton of capital to be able to go do bigger secondary deals and bigger transactions. And industry venture does a little bit of fund of funds as well. So just bear that in mind. The way I would put it is Goldman Sachs has just entered the secondary market in a big way, is the way I would look at it. As opposed to Charles Schwab and Morgan Stanley, which is really acting as a distribution for the existing platforms and giving more access. Now, what does that all mean? It's all exciting, right? And in our pitch deck got changed overnight, by the way, for Key Capital, and all of a sudden on slide 2, there's a whole bunch of logos of look what's happening in secondaries and etc. Ahmed, I know it's close to your heart as well about secondaries, and I think we've all been talking about it for so long. I'm glad to see it go mainstream. There's so much I can say, but I'm going to stop here and say, this means things have gone mainstream. I think secondaries comes out of the shadows. I think it becomes more visible. It's part of people's portfolios. It already has been, but it becomes more formalized. And this is just an emphasis or underlining of that action.
So let me stay with you for a second here. It's very rare to see a VC firm get acquired, right? I haven't heard of that so many times. I think only 3 or 4 times. But why do you think a secondaries fund, or not fund, a secondaries VC firm is a good acquisition for a bank?
The question is who approached who, and I guess we don't know yet. Maybe it will come out over time and who came after who. There is a bifurcation happening in the VC industry, as I'm sure you've read, Ahmed, and we've all been hearing about this idea that either you're a niche small VC concentrated on a particular angle, like you do life sciences in Cambridge and UK, right? Or you do defense technology in Germany and France, and you're very niche, or you become this mega institution. So Andreessen, Sequoia, all of these guys are just becoming very large asset managers. They're able to not just do VC, but growth equity, pre-IPO, they do the whole lot, okay? Now put yourself in industry ventures shoes. If I had to speculate, and again, this is pure speculation of someone who's sitting here observing and paying close attention to what's happening, I guess industry ventures decided, oh man, we're going to need a lot more capital to keep doing this strategy. If we're going to get into AI, if OpenAI is worth 500 billion on last valuation, and I want to do a secondary for 10% of that company, that's a $50 billion check to write. Now, all of industry ventures funds added together don't add up to 50 billion. And they're on fund 7 or 8, if I remember correctly. Okay.
That's 6 or 7 billion.
Yeah, correct. So you see what I'm saying? All of a sudden, the game has just become a whole lot bigger in secondaries. And you need to level up or stay niche. And I guess they decided to level up. So my view is that. On the flip side, I think Goldman Sachs said, hey, who's the best at this? And industry ventures is always held up as a very high performer in the industry. And so for them, it's like, why would we build it? Why don't we just buy it or acquire it? So I think it's a win-win for both sides, is my guess. It's clear that the management team, there's an earnout. There's clear that the management team for industry ventures is staying. So it's not like they're buying it for the assets. I think they're buying it for the strategy. They're buying it for the know-how. And I guess industry ventures would love to have $50 billion to be able to buy 10% of OpenAI if it so wishes to, or whatever companies they look at. The AI companies are, the billions sound like millions, and you can get easily confused on the size of these companies if you're not paying attention to the letters.
Billion is the new million. Not that what I think.
Yeah, actually, Basil have said it all. Like secondaries at this market, it was like myself, I was questioning because I have met a lot of VCs who are trying to sell their secondaries portfolios, and they have find it like so hard to sell their portfolio companies, and VCs from the other side reaching out to the startups and trying to find like a deal. But I see it like, why not just make it like mainstream, as Basil said earlier? And having the fact is everyone have done this and had the same mentality at the same time, it means that the mentality is changing. And I think it's very important for even in the MENA region markets, they need to give it attention and to start to consider secondaries and to start to change the mentality that we have right now.
Okay, the mentality is changing. That's all good. I love that because I'm also focused on secondaries. But from a wealth management angle, these platforms are trying to democratize access to late stage tech stocks. Awesome. But is it really about that or about selling liquid risk to retail at the peak of a hype cycle? Are we taking the retail risk profile into account when we're trying to sell them, those kinds of stocks?
90% of all the capital in secondaries goes to like less than 1% of the companies in private market, just to start off with. So we have a long way to democratizing secondaries across the entire ecosystem, let alone emerging markets, Ahmed, which you and I have been like trying to break rocks, trying to get this idea in put into the market. And I know the work you've done. I think it's fantastic. And I'm sure you know what we've been up to. And we're trying to really create something out of starting from zero. But globally speaking, even in the US, still a majority of the money goes into very specific assets, SpaceX and OpenAI and Anthropic and whatever those companies that people are chasing, big brand names, ones that are seen to be revolutionizing, a lot of them in AI because that's the big buzzword, and space technology is going to be the next one, quantum will be the one after it, etc., etc. Now, what's happening at the same time is there's a whole layer of investors and players coming into what I'd call the bottom 90% or the smaller assets. And by small, they're not small, just to be clear. They're just not as well known as the big guys. That's all it is. And I think Equity Zen and Forge are really interesting because that's going to allow all of a sudden Charles Schwab trade user will be able to buy a company in Austin, Texas or in Boston, Massachusetts that maybe, I don't know, his daughter or his son work at or his cousin or whatever, and have access to shares in these private companies, which would have been nearly impossible in the past to do. And I think that's going to create a whole new market, as I'm sure regulations are also changing in the US on SEC side, where they're allowing funds to take bigger positions on secondary. So there's a whole bunch of things happening, regulatory, market structure, investor-wise, that will just keep fueling private capital into secondary shares. And the US is generally the lead and everybody else follows. And we love that because that means the opportunity is coming here, Ahmed, and you and I hopefully will be making a ton of money very soon doing this strategy.
Okay, the next logical question is, are secondaries going to replace IPOs as a main exit for VCs?
So far, 2025, there's been more secondary transactions than IPOs in the US. And I think that applies globally probably, but the statistic I have is a US related one. And I'm only using the US because again, that's the most mature market on this topic and where this activity has happened. I don't think that's sustainable. I don't think that's going to be the case. I think it will keep fluctuating between IPOs and secondaries. But I think what people have realized is that it's become an important part of running private companies. Why go public if you can sell your share in a secondary? The premium difference is starting to get narrower and narrower, or the discount, if you like, is starting to get narrower and narrower. Public companies have a lot of burdens, regulatory scrutiny, visibility. They're subject to volatility. Private companies can take a different type of risk and manage in the long term better than quarterly earnings. There's a whole bunch of stuff, right? And so without regurgitating all the arguments, the short answer to your question is they're here to stay. They'll always be in the top 1, 2, or 3 of liquidity pools going forward. That I think is safe to assume. Always the number one, maybe not, but definitely 1, 2, or 3.
Nada, from a corporate VC perspective, would you be more comfortable in exiting through secondaries, or do you prefer IPOs and acquisitions, the usual typical track?
I would prefer to explore all the options. But actually, in fact, in our case, as a corporate VC, we chose the IPO scenario for now. So the scenario and the decision that we had made already was an IPO. But for the upcoming options, actually, we are exploring, we are studying more the secondary options. But yeah, as a corporate, we have this conservative mentality and also very realistic mentality. So we had this experience. So we chose to go the IPO and the traditional way with the first startup. But actually now we are trying to study more, to learn more about the other options of the secondaries. So we can have later this to consider later this option as a corporate. But it depends on a lot of things. It's the first time we are doing the IPO. Maybe after this whole experience, we can make other decisions with other portfolio companies.
You think the Egyptian stock market is deep enough for such an IPO, given what's happening in Dubai and Talabat? Are you optimistic about the reaction of the market?
In Egypt?
Yep.
Yeah, I guess we are in the right time in Egypt right now. Very optimistic conditions, and what's happening in the market is really encouraging. I guess a lot of changes are happening right now in Egypt, which makes a lot of maybe VCs also, the market is really attractive for them. I guess we have a better positioning in the global and the MENA landscape. So I'm very optimistic in general. And for Egypt and the ecosystem, this year was really successful for many startups. We have a lot of startups have raised like a lot of money. And only I can remember in May, Egyptian startups have raised like more than $100 million. So I guess we are having a really nice and good year for the startup ecosystem, highlighting actually the startup talent, the startup founders. And it's about having more exits, more unicorns, more startups who are like going global. It's not easy, and we didn't reach this yet in Egypt. So I wish for the upcoming few years we can see more Egyptian startups in the global market and more success stories in the global market as well.
Everything that's happening with secondaries in the US.
Yeah.
What's the MENA playbook here? Do we need our own version of these platforms like Forge and EquityZen plugged into the local brokers and banks and all of that? Or will the global platforms like these ones eventually come and dominate the secondary trading for the MENA big names, the Thabis and Tamaras and all of
I don't
these?
think it's either or. I think they're different products. So I would start off by saying that Forge already has someone on the ground here, and they run around. What they do is they promoting US stocks and US companies to investors here. Investors in the region have already been accessing those stocks through their banks and through their relationships. They're not limited geographically because they're based here. So I will not ignore, but I'll put that part of the question aside. If crypto was here before we had crypto, in fact, it already exists. People are trading it. It's just a question of who has access and how easy is it to do so. For the local companies, yeah, I think we have an issue. I really think the VC model in the region is broken. And I say it time and time again. It's built on the assumption that companies will list. How many listings have we really had? It's built on the assumption of companies will exit through M&A. Really? Name me the M&As that have happened and that have happened not under duress, right? That have really given full value to investors. And I think you'll see that it was limited as well. And the examples, take all the M&As you like. There's not that many of them. And we can go through each one and you'll see that it didn't maximize shareholder return. And yet funds are marketed in the region on the basis of these valuations and on the basis of these marks, when there's really not a true ability to say what's the value of these assets in a transaction, in a secondary market. So if anything, it's a necessity, Ahmad, and that necessity is getting worse, I guess, better, depending on where you sit in the equation. For you and I, it's getting better. For everybody else, it's getting worse, which means is the necessity for investors to find liquidity. I'm glad NEDA and their portfolio, they have a company they can IPO, but I can assure NEDA and I can assure every investor out there, 95% of your portfolio will not IPO. So what are you going to do? And she already said she's exploring other options, which is music to my ears, music to your ears, Ahmed. But this is good news for us because more and more assets will become available. Now, is secondary the only way to do it? No, there's private equity, there's other structures and other dividend plays, yield plays. There's all sorts of ways for investors to get returns. And I guess that's a question for each company and its situation. But my sense is, yeah, we need every type of tool that we can to start solving the problem that we've created, which is we started the VC industry, but nobody figured out how the story ends yet.
Basil, I keep getting this feedback from people who don't really get secondaries, and they keep saying, hey, you don't care about who's buying. You're just kicking the ball down the road, or you're just shifting the problem of exit from you as an investor to the retail or the accredited investors or whoever is buying. And I keep saying, no, it's really giving access to pre-IPO shares. And you're seeing what's happening in the stock markets today. And people are thirsty for pre-IPO. They realize that to make wealth in tech, usually you need to access those shares before the IPO, not after the IPO. What do you think? How do you respond to that?
Yeah, I think there's a lot of skepticism around secondaries, and I appreciate that any new market being developed or any new product being developed will have that. In 2016, and I always laugh with Army from PFG about this, I had looked at the idea of venture debt and people thought it was crazy, right? And I still have a deck, and I always tell her if she ever says the word that she was the first at it, I will make sure to publish my deck on venture debt. I went around to investors, to LPs, talking about giving loans to unprofitable startup companies, and they thought I was crazy. And today, venture debt is a solid product that nearly every company in the region is either already using or looking to use as a way to finance their growth and so on. And it turns out you can lend money to startups who are unprofitable if you know how to secure certain receivables and certain ways of collecting on your debt, and that it's still a cheaper way to finance a company than using equity and dilution and all of that. I think you and I are sitting in that stage where people are skeptical about secondaries. They're throwing at us every challenge, and I'd welcome an open stage with all of them at one time. You and I, we can take every question together, answer it. I think we'd have a lot of fun with it. To answer your question is, ultimately, you got to think who's the rightful owner long-term for a business. And some investors want capital appreciation. They want to buy a share of a company at X valuation, and they want to know that in 3 years, in 5 years, in 10 years, it's going to be worth 10x. They're not interested in a dividend. They're not interested in a yield. And those are the types of investors that would be interested, I think, in secondaries, where they're looking for capital appreciation. Remember, we don't look at companies that aren't doing well. We only look at companies that are doing well. We're providing liquidity in secondaries for good companies, but we're giving liquidity to those investors who, for their own reasons, they need to get liquidity, as opposed to the company has a problem. And so I always say to people, we're capital appreciation platform. We help you grow wealth by multiplying it. You're not going to make a yield off of what we're doing. You're going to make an appreciation of what we're doing. And it's our job to work on getting you in and out of those positions over time in a way that gives you extraordinary returns. And by the way, you look globally, secondaries have outperformed pretty much every other asset class. So it's not a hard argument if they look at the data. It's just getting them to look at the data, Ahmad.
A friend that was trying to prove by the data that, hey, secondaries as a strategy within the venture asset class
It's better than all of them.
higher return and lower risk. And he was like, no, this doesn't make any sense. Higher risk means higher return, or higher return means higher risk. You cannot change that logic. I'm like, no, it's the data is talking, not me. Anyway.
Yeah, actually, I have a last reaction for this, the IPO. Actually, IPO is not for sure the perfect scenario for all the startups or for all the companies. They should stop like thinking of the startup journey as a stereotype thing that they should reach the IPO level at some point. It's not the perfect scenario for all the companies or for every case. They should think in a different way. And yeah, I'm glad that I'm hearing your perspective, Basil and Ahmed, on the secondaries, because actually I was thinking of this. I can't take all the portfolio companies that we have to an IPO and having this scenario. And yeah, secondaries, it sounds like now it makes a lot of sense. We were discussing this, but very high level. But now I guess we can take it like more serious.
Things we're
in more
converting
serious
someone else now.
conversations.
Brenda Club Nader.
Yeah, because actually, since day one, it makes like sense for me. But I never had like the validation of the model that much in the ecosystem. So sometimes you are, especially when you are backed by corporate, it's so hard to go out of the regular scenarios. It's so hard to take and to make this risk. But yeah, I think we need to have more conversations on the secondaries.
Okay, we're going to move to the next story. But before we move on, we can't talk about secondaries without just giving a shout out to Zest Equity in Thanawi. They've been working really hard to build an infrastructure for secondaries in the market. And they pivoted a few times to provide what's really needed in the market. They're building a really good infrastructure to power us and secondary funds and power all of the other transactions. Basil, any comments on this before we
No, I
move
love
on?
what they're doing, and I think they're great. And I think, again, there's a lot of work still to be done. We can sit here and talk about it like it's the solution to all things, but it's not, right? There's still things missing, education and knowledge. To your point, infrastructure tools that make that process easier, more transparent, more reliable, especially when you have a lot of small transactions with ESOPs and stuff like that. That's a very complicated world as well that we haven't spent time talking about. It's a whole other world of secondaries. And then I think there's the regulatory framework. There's a whole bunch of stuff, right? There's a lot of things that need to happen. And I love what the guys at Zest Equity are doing. I give them a lot of credit. So shout out to them.
Okay, Jamie, we talked about the Dubizzle
Mm.
IPO. We were so excited about this. We covered it, I think, I don't know, a few months ago. What's happening with that?
Yeah, there's been one big secondary love-in, and then this next story is going to just add further credence to probably the necessity of it as an instrument. But yeah, a guest that we had on, Xavier Chris, has proved prophetic. Remember, we had him on Ahmad, and he was telling why this wouldn't go ahead, and lo and behold, that indeed did come to pass. On one level, it's maybe no surprise when you look at things. I think they previously raised in 2021 at $1.2 billion. This time around, they were looking for $2 billion going to market. It's been a pretty tepid year from a sort of Dubai financial market perspective, all things considered. Talabat celebrated its anniversary there recently, down, was it 49% year over year? So it hasn't quite been I think it was around this time last year we were celebrating, and yeah, lo and behold, that
was really disappointing. Talabat is a really good company. Why? I don't know why their stock is not performing.
overpriced. I think
It was maybe
I think the investment
overpriced.
banks did a really good job, but then unfortunately, I think that's just the reality. And obviously new CEO coming in there as well. But look, let's not talk about Talabat. Let's keep it on Dubizzle. And look, it's just competitive as well. Property Finder obviously making big moves as well, as far as with Blackstone. They raised the debt recently as well. I think that probably plays a part, to be honest. So I think it's a multitude of factors.
As Jamie said, reacting on Talabat, sometimes startups or companies overpricing themselves is a killer for the business. And also at some point in their growth, I think we are like living a different timing, and the investor's mentality is totally different than maybe 5, 6, 10 years ago. So startups needs, and actually companies needs to change their mentalities as well in pricing, because it could be your huge problem later when you are going to have this kind of IPO, or it's not going to be easy for investors. They are not dumb to just put any money in terms of you are a huge company or you achieved good numbers. You have to be more realistic when it comes to your pricing at this level, at the growth level, especially because we have seen a lot of unrealistic numbers and it's fired back later. It's happened many times.
The corrections are happening not only on the stock market, but also in the down rounds that we're seeing in some of the big names. So yeah, it's always ups and downs, but it's really hard to time it whenever you want to go public.
Timing is very important as well. Yeah.
Basil.
So I'm going to say what's very obvious and maybe a bit self-serving here. IPOing is really hard to do, right? Anybody who thinks that somehow the world is waiting for your company to show up to IPO and people are going to be throwing money at you at any price are kidding themselves. There are times when the market is a little bit more investor friendly, founder friendly or company friendly. And there are times when the market is more investor friendly. And we're definitely living in a time that if you're not an AI company, it's going to be investor friendly. If it's an AI company, Dubizzle.ai would have done a lot better than Dubizzle.com.
Okay.
And I'm kidding, but what I mean by that is there are companies that there's always hype and there's always cycles of hype. And you can read a lot about that. But the reality for most companies, and that again is going to apply to 100% of the companies in the region, with a very few exceptions, is that you have to be within some realistic norm of what investors expect. The other thing I'll say is, I have to say, and be careful with words, but I'm embarrassed for the advisors. If this isn't a company that decided to IPO on its own, it had bankers, it had advisors, it had all people around it. And the fact that they think they could take it to market at that valuation is a little bit shame on them as well, because we have to call a spade a spade. Yes, the company has a certain performance. Valuation, you could argue, is the company's decision what they want to market themselves at. But they had advisors there, and the advisors should have been very careful with how this was positioned. It wasn't hard. I think even before the company went to the market, we were already hearing people saying, this isn't going to work, this isn't going to work, this isn't going to work. Like, how did that rumor start if people weren't already saying, you're looking at a valuation, you're looking at profitability metrics that don't make sense for us in this region? And it comes back to IPOing is hard, and only very few companies will IPO. I think Dubizzle being a private company is actually a good thing. I think it's going to allow them to do a lot more, grow in the fast-growing and real estate world that we're living in, which is their main business, and their Bayut, and they're going to be able to invest in their business and do what they need to do. Had they gone public, they would have been having a difficult time explaining to people what happened to their share price and all sorts of stuff. So I'm glad, for one, that it hasn't gone public, because I think it would have been, we don't need more stories of companies not doing well after that. We need companies to IPO and continue to do well. And the fact that the market said no is good news as far as I'm concerned.
I think it's going to be hard now for them
Yeah,
to raise funding after they've now that sort of failed IPO attempts, because one would like to think they need additional capital to, you know, first off, I think their story wasn't necessarily the most compelling. Classifieds is ostensibly quite boring, and they don't really have, to your point, Basil, I know it's tongue in cheek, but in terms of the AI sort of stories, you probably find they're doing interesting things as far as stake is concerned, and it's all rather dull, I would say, as far as Dubizzle is concerned, just being quite blunt about things. With Blackstone backing Property Finder, then they've raised that debt. Yeah, who's coming in, who's swooping in to arm Dubizzle?
I think PropTech is super exciting for many investors. I think people still see this as a growing sector. There's still a lot of buzz. I think we're all surprised and shocked by the continued growth in real estate all across the region. It's a global phenomenon, but in UAE especially, and in Saudi and so on, it's been doing incredibly well. No, I think there are private investors who would be excited to work with Dubizzle and to help them grow and to do more with them. And that's one way. And you can either buy a house or you can invest in a company that helps selling houses. Those are two ways to get exposure to the market. Depends on which way you want to do it. So I guess the answer to your question is no, I think it's still a strong story. I think it's still an interesting company. I don't think they would have gotten that far in the process had they not been a strong story. I'm just saying there's times to IPOing is hard. You have to convince a different type of investor who has a different type of appetite. Public equities, people can buy and sell your shares very quickly, and they can come in and out. It has a retail element, it has a yield element, it has other criteria that is investors. And when you get compared to that list, you may not be the nicest story on earth, but if you were to say, hey, look at PropTech, what can I invest in PropTech? And I want exposure to PropTech, Dubizzle is a fantastic story. So it depends on who you want to stand next to. Don't put me in a beauty pageant, right? I'm not going to do well. But hopefully if I'm standing up against other secondary funds, Ahmad, and we're all standing together, hey, I'll try to do, maybe I'll stand out over there. So who you're being compared to is important, I think, is what I'm trying to answer your question.
Let me take the other side of the story here. What about the governments, the regulators? Is there anything they need to change for the IPO market to be more active, or it's just investor appetite and they can't really do anything?
It's a global issue. Outside the US, volumes have a different level, right, Ahmad? So I think to say that this is an issue here in the region would be the first, I think, thing I would just want to correct. I think liquidity on stock exchanges is a challenge. In the region here, definitely how you get more people to invest in the stock market is an opportunity and a very challenging one. But I like the fact that a Robinhood is coming in, and I like the fact that these guys are coming. I don't think it's good for the ecosystem, and I wrote a post about it, just FYI, where I said I think that is going to
We'll link to that post. Please provide us with the link. We'll link to that post in the description.
I think it has an impact on Thunder and Baraka and Sarwa because these guys are going to come in and they're going to compete hard with them. But if it brings international investors into the local stock exchanges, fantastic. It's a good news. So I don't know which one, what happens, more capital in or more capital out? I think that's the challenge we'll have to see on that one. Nada, I think I cut you off there. I apologize.
It's okay. It's okay. I guess the governmental and the regulatory support is always needed to take the ecosystem to the next level. It's always needed to consider new rules, being more open-minded and supportive and actually understanding for what's happening, the appetite of the investors, doing more activities to attract investors and to encourage the startups and the companies to grow and to actually know the roadmap and the manual of being an IPO or a private company. So I believe they need to have a very strong role, raising the awareness, educating the startups, enhancing the quality of the rules to support the ecosystem, especially in the region, especially in Egypt. I think they have a huge role here to do.
Okay, let's move to the last story of the day and end on a positive note, some happy news, acquisitions. Jamie.
With some acquisitions and a story which is close to my heart, which is strange because I'm not Egyptian and I have nothing to do with semiconductors. I think it was our second episode of the podcast, Ahmed, when we had Tamer from Sharuk on, and that was the first sniff I'd ever gotten of an Egyptian semiconductor industry that was operating under the radar. And lo and behold, we have an exit not long after raising their seed round in Finalink. Which was quite remarkable, really. I think they raised their 10 million seed only back in May, as far as I'm aware, and they've already been acquired by Global Foundries, which I suppose is maybe a sign of the times as far as all things AI and infrastructure and semiconductor related is. In terms of the exit itself, I'm not entirely sure. I think was it Egypt Ventures reportedly it was like a 400% return or 4x on the exit. Unclear about these figures. Maybe something will come out at some point. I've been trying to contact Ahmed from Infinilink for the last 6 months. So I'm putting this out in public now because he's yet to respond to my emails. Ahmed, if you're listening, please respond to my email. I would love to talk.
Okay, Nada, let me start with you.
I can help with the connection there.
Oh, well.
Okay, good.
Yes.
He's doing
Wonderful.
Looking at Nada,
Okay.
I'm sure she has his WhatsApp. That can't be hard.
It's very exciting because we never been popular with deep tech startups in Egypt. So it was like a surprise and also a good news. And I think it proves that we can, as Egyptian ecosystem, we can have this success stories because we had this era of, as I told you, we never had deep tech startups in Egypt or even deep tech investors in Egypt that much. Okay, it's only maybe 1, 2, 3 venture capitals who are interested in doing these investments and to support deep tech startups. And I guess it's very important now. These kind of success stories, I don't think it comes like this. It has a months and years of hard work. After this success story, we need to change the mentality. We need to focus more with the early stage startups. We need to change how we deal with the seed and the pre-seed startups at this stage as investors. Also, the corporates needs to learn from how to catch the opportunities and to have a wider visibility on what's happening in the startup ecosystem and the startup scene and how important it is for corporates. So I love the news. And I think it has a lot of impact on the ecosystem and on the startups, the investors, and also the corporates mentality.
That's very interesting because I actually prefer the question about that. What should corporations learn from this story? It's just one story, but we're seeing more and more corporations acquire deep tech companies very early on. So there's two sides to this. What can corporations learn from this, and how should they start looking at seed stage companies? But the other side of the story is, hey, are we selling too early? Especially in deep tech. Investors are hesitant in the MENA region to invest in deep tech companies, not to say semiconductor companies. I only heard of, I think, 3 or 4 semiconductor companies in the whole MENA region. They're still all early. So are we selling too early? We don't have enough investors to support them to take them to the next level, so that whenever there's any global player coming to acquire, we're just selling immediately. What do you think on this balance?
Yeah, actually, I had mixed feelings the minute I heard this new, because I felt like it is too early. And actually, I'm against corporates acquires the startups that early in that position. And I was trying to change this mentality into GB Corp, because we used to acquire a lot of companies early on. But against this, because you are kind of limiting the growth of the company outside your world as a corporate. But I can't blame them. At the end of the day, when I was like thinking and putting myself on the founder shoe, I know for sure that they were trying to get fund from other investors, and maybe they couldn't find like the enough support. And when they compared the acquisition model to what the other offers, they chose the acquisition. And maybe it's also strategic for the corporate. I think it's like it needs the two partners and the two parties work. It needs the corporations to be more supportive to the startups and to be more like realistic about the shares and the equity in terms of what they are offering. At the end of the day, it's not about acquiring the startups. It's about how we are going to grow and to help the startup to scale when they are in our portfolio, or and for the startups to actually be very aware of the step of the acquisitions and what are the consequences of being acquired by a corporation that not small. It's different world and different rules, different everything. It's not gonna be like the same as before. So it needs the awareness for both sides. They need to know what they are going through after the acquisition, and they need actually sometimes the acquisition is not the perfect scenario for the corporate, because if you are not like leading this market and taking like the majority of this market as a corporation, and the startup has the potential in the future to contribute in like a bigger scale in this ecosystem and market, it's your loss to just acquire it and kill it early on.
Okay, Basil, wrap us up.
Okay, we're going to
What do
need
you think
another
about that?
episode because I have so many things I agree with and I disagree with. So I'm going to try to keep really.
I felt it in your
Yeah,
accent.
first of all, the only sustainable form of innovation is scientific innovation that comes out of university and technology based. And there are not enough VCs spending time on this, that's for sure. Two, Egypt has a number of deep tech companies actually, and it goes back quite a bit. I'm not sure people know a lot of the software for cars that helps cars in driving, not self-driving cars, but just regular cars, have software in them that help and assist in driving, is developed by a company in Egypt. Okay. And I think Ford and Mercedes, and I don't know who use Avilabs if you want to look them up. Okay. This is as not the first semiconductor, but the second semiconductor company. And there's a few others. Actually, Egypt's quite an issue because it has so many universities, a lot of people coming out of Ain Shams, Cairo University, Helwan University. It has an amazing set of it. I just wish there's more capital going behind these entrepreneurs. That's a whole other story. We love the founders who like to do pitch decks and tell us a story about, I don't know, prop tech because it sounds exciting, but these are probably founders that require more hands-on VCs spending time with them to develop them from an idea to a business. And that, I think, is a gap missing in Egypt and all across the region, for that matter.
And to take the IP from research to commercialization.
Absolutely.
Yeah.
Very difficult thing to do. So I'm actually excited about the acquisition because I think it will make people pay attention. And I think paying attention is half the battle, to what Nada was saying. Like, where do you focus your effort as a corporate VC? Where do you focus your effort as a regular or a financial investor? People need to focus. And this idea that they can be everything to everybody is really not working anymore for the ecosystem. I think what you really need to do is say, what are the things I can do better than anybody else? And I'm going to become really good at it so that I can make alpha for my investors and for myself. And in a corporate VC, there's a lot of advantages you can have. And if you focus on them, you'll get those advantages out. The last thing I'll say is, I think an exit is an exit. And you can judge it. We can judge it all we want, good, bad, too early, too whatever. But it's still a really positive signal for everybody involved, employees, shareholders, and others. In AI, I do expect to see more early exits. We also saw Optima, right? Don't forget. Recently in the edtech space here. I think if you're in AI, looking at what's happening globally with the amount of money going into it, you better exit early. You better raise a lot of money, or you better exit early, because the battle is going to become very expensive and you may lose everything you got if you're not supported. And I think if you're in semiconductors, same thing. You can only get so far with the capital available in the region. And then at some point, you really need someone massive. And to make full circle, it's a bit like industry ventures being bought by Goldman Sachs. At some point, you need to level up. And I think what the company in Egypt did is it leveled up.
So Basil, why can't we just go out there and raise capital, the needed capital from international investors? Apparently, we're really good. International corporations are coming to acquire our companies. Why can't those founders go out there and raise money from outside?
I think some try, some have been successful. I think there are some interesting stories, and there are companies that have raised international capital. I think the skill set needed is not broadly available. And the skill set isn't just about having a good story or building a good product. You have to be able to show that you're building a good company. And there's a difference between, I have a nice idea and I want some money locally, globally, and then I'm building a really strong company that can compete at least at a regional level, right? And ideally at a global level where you can then attract global capital for it. And it goes to things like governance, and it goes to things like transparency and financial well-being, and running the business to a certain standard and certain integrity and certain ethics in a certain way. All of that on top of a great product and a great management team. People are developing the skills. I don't want to say it negative. It's not like we cannot get those skills, but trial and error has led to more error than trial. I do think we're getting better at it, and I do see more founders being able to raise internationally. There's an example which I can't talk about in detail, but the company that we took on the trek, Jamie, when we went to London with the companies for Key Capital, that's just closed a massive round from an international investor off the back of that trek. And I think we do this trip where we take startups to London and we introduce them to international investors, all on a kind of pro bono basis, but we do it to be able to attract global investors, Ahmed. And you're starting to see, this is the third year, and we're starting to see the results get better and better every year in terms of the amount of money and the amount of investors who are engaging with the region. So I'm optimistic about the future, but hey, we got to continue to build our skills, build our suave at doing this.
Yeah, I was following the news from John from Okta, because I think he went with your latest group. And thank you so much, Basil, for doing this in the region, connecting the Middle East companies to international investors. That's what we really need in here. And since we're speaking about Okta, good segue to end up with this. Before we wrap up, a big thank you to Okta for making today's episode possible. If you're tired of chasing payments, fixing invoice errors, or wondering where the cash actually is, you need to check them out.
Yes, they help you get paid faster, access financing when you need it, and automate all the messy parts of receivables that no one really wants to deal with. They're already working with over 800 companies, and for good reason. It's one of those tools that just quietly makes your finance ops work better. So head over to weareokta.com, that is weareokta.com, and see why so many businesses are switching to the modern way of getting paid.
With that, so much for joining us today, Nada and Basil.
Thank
And as always, Amy, thank you so much for bringing us all these news every week.
Thanks, guys.